Hello, followers of the 4-year journey. This is Bob Lucas here on November the 3rd, 2022. Nearly 4 years since the very first video was published back in December of 2018. Back then, I was talking about the coming 4-year cycle and how it was very, very close to forming. And here I am again today, nearly 4 years later, to tell you that an end to a cycle is near or is already here. It may not seem like it today, but like many things in life, it's always the darkest near the end of a cycle. The end of a cycle signals the death of a period and the birth of a new period. And I believe we are right now transitioning from the end of one cycle and to the beginning of a next cycle. The beginning of a cycle like this is always, in my opinion, an exciting time. It allows us to potentially get in well before the crowds return, way before the mania returns, and hopefully being able to acknowledge what has occurred during the prior 4 years and use that experience, learn from that experience, regardless of how well you performed or took advantage of it or did not take advantage of it, or whatever your result was. This is one of those sort of reset moments when you hopefully get to put that behind, but take the experience from it and begin to look forward again and begin to position yourself for what I believe is yet another major opportunity ahead. What people don't realize in investing is that a lot of the time you don't necessarily always need to be right, and you don't need to be first, and you certainly don't want to be last. But when you're early to a cycle, it has a tendency or a way to correct all future timing errors that you make. Being able to get in at a low cost basis and be able to ride a cycle higher again before it becomes news and before your neighbors and your friends begin talking about it in 2023 or 2024 more likely. That ability to get in at the ground up or near the ground up allows for you to really be able to profit from the cycle ahead and to be able to still manage to walk out doing really well from a cycle, even if you don't manage to get out near the top of a cycle. So in today's video, I really want to talk about just how close are we to an end to a cycle. Is it possible that we're already in a new cycle, or what might the final move in this cycle look like? You also want to talk about positioning for this next cycle. Should you be buying? Should you already be bought? Or should you be waiting? And what that risk reward looks like taking either of those decisions. And then I want to talk about some of the fears that you may still have around rising rates, risk off environment, possible recession, and so on. So let's start now with some charts here and talk about where we stand in this cycle. First, I'm going to share with you a chart that was shared 4 years ago, before all this was filled in. And, I talked about this 3 years up, 1 year down, right translation that you see in these 4-year cycles. And we had exactly that in this 4-year cycle. Of course, looking at prior 4-year cycle performance, some of the expectation was, at least in the most bullish scenario, that will reach a target of around 200,000 in this past cycle. And of course, we didn't come close to that. But from a timing standpoint, we did top exactly at that 3-year mark, 75% of the duration of the cycle, moving mostly or trending mostly in the up direction, with what has now been, and of course it hasn't ended yet, has been nearly a year in the declining phase of this bear market, or the bear market of this 4-year cycle. You actually get a nice visual of the 4-year cycle if you use a yearly bar on Bitcoin. And as you can see, the rising portion of the cycle followed by the bear phase of the cycle, and the 3 years up and the 1 year down, the 3 years up. a very clean, simple look at the ebb and flow of the 4-year cycle represented in yearly candles. Flipping over to a monthly view here of the cycles, and what you see is that we have now entered what we call the timing band for the next cycle low, the next 4-year cycle low, with Bitcoin sitting now on month 47 since the cycle began back here in December of 2018. You notice the distinct move up to that 34-month high like the prior cycle and the 33 months before that. But what I think a lot of people are talking about now is this idea that Bitcoin is going to drop down into the sort of lower teens area that mirrors the type of move that we saw here in November of 2018, and to a lesser extent what you saw back here in January of 2015 into that cycle low. And this, I believe, has got a lot of people holding back from investing because they think there is yet another move yet to come towards this $13,000 level. And I've given this a lot of thought, and my takeaway from this is that one should not be waiting or anticipating a move down to that $12,000 or $13,000 range. Doesn't mean it won't come, and I believe there probably is a 50-50 chance that we still have one more significant decline down into this $12,000 or $13,000 range. But part of me thinks it just doesn't have to come when you consider that cycles rhyme, and obviously the Bitcoin 4-year cycles, the rhythm has been very, very distinct and has mirrored prior cycles very well. But that in itself is a trap in thinking that the next cycle or the end to this cycle must end the same way. Also, when you consider that as this asset class has reached far wider adoption with more institutional play, and also the market cap of Bitcoin itself at a much higher level, the asset is maturing. Okay, it's obviously still very early, but it's maturing. And in some regards, you see that in the way it sort of topped out by that $70,000, $80,000 range. You had a lot hungrier capital chasing this, and that capital saw enough of a gain in this cycle to basically cause a top and to sell out and profit from the cycle, unlike other cycles. And the same, I believe, works on the downside. So in the past, where we had these massive extensions to a peak, then 85% drawdowns to the trough, I don't think we need to necessarily expect the same thing to happen. In fact, as I just said, we didn't get that blow off to 200,000, but we got a blow off. Okay, to make no mistake, we had a significant run, and especially the first run to a peak. And we're now down 75%. Now that, in theory, should be enough for an asset that is showing more diminishing returns over time, that's maturing. So I caution everybody when they ask, should I be buying, should I wait? The question really is, I think we've seen enough of a decline where the surprise really now is going to be that you don't get that decline. It just seems that sentiment is heavily leaning towards us dropping down to that $13,000, $12,000, $13,000, $14,000 range. And the pain trade is that this releases to the upside, and this sort of 4 or 5 month consolidation around this $18,000 to $24,000 range ends with the market breaking higher, leading to a move possibly to 28.30, getting people to jump back in and then shaking them out one time for a drop back to double test kind of that $20,000 range, or some variation of that where it becomes difficult to get in, and you also get shaken out trying to chase the market in the early phase of a 4-year cycle. So when it comes to positioning, the way I see something like this is that if you're in this for the long term and you're looking at the next 4-year cycle, and that you're looking for somewhat of a repeat of prior of the sort of structure that we've seen in prior cycles, then again you're looking for a move to all-time highs, and then you're looking for a move a number of multiples above that, okay? And I'm really reluctant this time around to sort of throw out targets and throw out numbers. But even in this little left translated scenario, and that means that you get a big move up early in the cycle and spend more time declining, even in that type of scenario, we would expect a move that takes us above the all-time high level. And from this point, even sort of something conservative to just above all-time highs is a 4x move from where we are today. So if you have a long-term view after the market being down 75%, it is my position that you should at least have a substantial core allocation at this point, at this sort of $20,000 range, because you're a long-term investor who believes in Bitcoin, who believes in these cycles, and that believes that by some point, possibly around 2024, that will be up into all-time highs again and pushing beyond at that point, and possibly looking for the type of blow-off move that puts 2017 to shame, that has absolute worldwide involvement, significant play by major institutions and major, even sovereign wealth funds, for example, essentially everybody on board for a generational kind of blow-off, something similar or the equivalent to, say, the dot-com boom in 1999 to 2000. And in that type of case, the upside targets could be significant, obviously. Again, don't want to really throw out any numbers. I don't think it really helps. I think what helps is to understand that just like in 2018 December, when I recorded that video, I believe Bitcoin was at 3,700, and then within 2 weeks it dropped to 3,100. Doesn't sound like a lot, but that's close to a 20% decline. But getting in at 3,700 and watching it drop to 3,100 was fine, right? Because I had a long-term view at that point. My position, entered position at that point, was with a reasonable allocation, a reasonable size, with the understanding that I wanted to hold that for a couple of years or 3 years up to the top of the next cycle. So I wasn't making a call to catch a falling knife, for example. I wasn't looking to catch the absolute bottom. I simply said to myself, after near 80, well, I think it was more than 80% decline over nearly 12 months at that point, that I was very content to get in, not knowing exactly if we had bottomed or whether a bottom was still ahead, but I was content at that point. And I think we find ourselves at a very similar position here today at 20,000. I think one should be content to get in at 20, content to see this fall to 13 or 14, to not freak out if it does, to understand that you can't time every market perfectly, but to understand that you're getting that position in case we just begin to sort of move out firmly and strongly from this position. Sentiment is fairly extreme. We've gone through sort of those liquidation phases of this 4-year cycle. We've gone through some major cleanouts and some major bankruptcies. Again, the 75% decline. Altcoins have gone through their usual, littering of dead bodies on this cycle. Everything is in place now for this market and cycle to turn. Now, of course, we do have, and I'll get into it a little bit later on, we do have sort of this risk-off environment across the board that is obviously impacting equities. But that doesn't mean that Bitcoin itself has to remain correlated to what equities are doing or what the risk-off market is currently doing. It doesn't have to remain correlated. We saw, for example, in 2008, 2009, when equities went on a final decline, we saw assets like gold, for example, and silver shoot up and not correlate on that final decline and shoot up towards their all-time high. A similar situation could occur again in Bitcoin. Okay, so I think what's important is to not get too greedy on the downside, but by the same token, if we do see that eventual drop, or if we do see a drop down to 12, 13, or 14, to understand that that is actually, or that would be that final move, that final capitulation down into the 4-year cycle low. And that would not be a reason to panic and to not be a reason to sell like many people would, but to realize that that would be an opportunity to add some more. So you want to leave some dry powder in that case, in the event that it does fall down, to double down at that point, but of course all within reason. Okay, and for me, all within reason means 25-30% of your portfolio, of your wealth, and even that could be high, but that's within reason, because you just don't know. First of all, you don't know what surprises are out there. We think we know what's coming because of what's happened in the past, but there are no guarantees in anything we do in investing, and Bitcoin is no exception to that. There are risks out there that probably are unforeseen. So I never advise anybody just sort of betting the ranch and taking a full position with all their wealth. I know many of you have and will, and that's really your own personal choice. But I can say that when you enter an investment with a reasonably sized position, what that affords the most is the luxury to be able to sleep comfortably at night when the market's capitulating or the market's selling. And it also leaves room to be able to take advantage of opportunities that may come beyond that as well. And an opportunity in this case would be if it actually did fall down towards that 10, 12, 13,000. And I know if it went down to that level, I would be buying more. I'd be allocating more from other investments or from other asset class investments that I hold. Because at that level, two things. One, I believe a drop down to that $12,000 or $13,000 level represents an extension from the high that then mirrors extensions down in prior cycles. It also would mean that it would be coming much deeper in the 4-year cycle, and that would give me a lot more confidence to say that that would be the ending or the final move in this cycle. So therefore, from a model portfolio standpoint, as you know, I re-entered in with 15 BTC from the model at the 19,000 level, not because I thought the 4-year cycle had ended, but because I thought 19,000 was a level that I had comfort in buying and holding for the next cycle, knowing that it could fall deeper, but it was at a capitulation point in the cycle that I thought had a chance, when I look back, that could actually mark the low of the 4-year cycle. So that was purchased at that point specifically for that reason, knowing that I'm going to hold that into the future. But there's some dry powder left from this 4-year cycle, from the prior 4-year cycle. And that is reserved for that possible final capitulation into the 4-year cycle low. And at that point, around the 14,500 level, I would look to deploy the remaining capital that's left over from the sales of this 4-year cycle. If it doesn't come, and for whatever reason the cycle holds and the lows are in, then that's it. That's my buying for this cycle. I've got enough. The portfolio would be mostly fully allocated from the prior cycle, and I would be then content to hold that in a very strong hand position for the next 4-year cycle. But Bob, what about rising interest rates, the Fed, recession, Ukraine, nuclear war, China, Iran, regulation? I mean, you can keep going. If you're afraid, you will find something to be afraid of. And those, not to discount any of those as risks. They're all risks. They're all out there, and we're all living those. And some of that is what you see in the cycles and what you're seeing in equities, for example, and that sell-off. The market is already pricing in a lot of those risks. But there comes a time, and again, generally near the end of a cycle, it's the darkest, because we've just gone through a period of pain and selling, and you're looking at the high water mark of your account, which is the wrong way to look at things, and you're looking at a prior paper balance of USD that you had achieved, and you're looking at it today and you're shaking your head, and that makes you fearful, that makes you afraid. And this is why it comes down to being in position at the right time and having a positive mindset for the cycle ahead. So yes, there are risks out there, and they could weigh on the market further, and they could be the catalyst for Bitcoin dropping down to those low teens, as I mentioned. But don't discount the market's ability to front run those events and to price them in well in advance. We've seen equities drop 25 and 30%. We've seen growth stocks down 40, 50, and 60%. There has been pain out there already. And at some point, the market will turn well in advance. And often when you look back at prior recessions, the market drops well before the recession, and often will even bottom out before the recession's known. And the same with rates. The market will really begin to understand when the Fed is looking, or could be looking at a top or an end to a rate cycle, and could turn higher. But you could also have situations, as I mentioned earlier, where Bitcoin stops acting like this risk asset and the narrative shifts, and the narrative becomes, well, it's a hedge, it's a store of value, or it's an untouchable asset. It's a self-sovereign kind of asset, and rallies for that point or for that reason. So don't discount the fact that we're in, and we've seen not just necessarily a 12-month decline, but when you consider this from a bull perspective, it really did top back up in here in April 21, and this period here was with a distribution period of the cycle. So when you look at it from sort of a different lens, here is a quarterly chart, so each bar representing 3 months. You see in prior cycles, the bubble phase right here led to the decline. But here's the bubble phase, and we spent 4 quarters distributing before the capitulation occurred. So in many regards, we're already gone through all of that bear phase, and we're ready to move higher from this point. I think ultimately what I'm trying to really illustrate here, really talk to you about, is that nobody has the answer of whether Bitcoin has bottomed, whether the bear market is over, or whether it's going to drop to 10 or 12,000. The people out there want to tell you, definitively what's going to happen, but I don't think they can, or they should. And I certainly can't do that. The only thing I know is that from a cycle standpoint, we're in the timing band for a low. I also know that we went through a distribution phase, and we went through a couple of liquidation phases, and now we've gone through this despair phase and low sentiment phase, where sentiment has hit an extreme. I know a lot of the on-chain analytics look really good for a low. And I know a lot of people are expecting a big downside move to come, and I think a lot of people are afraid in general. And all that, when put together, doesn't tell me that we've bottomed or that we have one more decline to come, but it tells me we're on the eve of an end to this cycle and the birth of a new cycle. And that's what I could care about. And when I can take out the short-term noise or the intermediate time frame noise, and I can look at this from an investor's perspective and be able to sleep at night and be positioned to back up my theory that Bitcoin is still an asset in demand with growing adoption that's going to rise, its market cap is going to rise over time, then when I put all that together, I can ignore that sort of possibility over the next couple of months and get my position, my reasonable position, and then look forward to the next 4-year cycle, knowing that there will be volatility in the short term and the medium term, and that this asset class will always have volatility. But when I have that long-term view and a reasonable size position, I can ignore that volatility, knowing it's going to come, and look a year or 2 or possibly 3 years out for when I really want to be on guard and really want to be looking to extract maximum value from this cycle. So this is going to end up being one of the shortest 4-year cycles, and I think that's probably fitting because I want the message to be very simple and very straightforward. If you're in the business of trying to time a bottom and trying to extract every ounce that you can get out of it, then you may be successful, but there's a very good chance that you won't be and that you may miss the next big move. So I just basically say at this point that, just like I said in the very first video 4 years ago, or nearly 4 years ago, if you get your position, get it early, buckle up, because as the next 4-year cycle gets going and the accumulation grows and the sellers begin to run dry and price begins to unlock and the trend begins to develop to the upside, sentiment will begin to shift, capital will begin to come back in, and before you know it, this market may be well ahead. And if you haven't taken that position, you may find it very difficult to get in. And if you do get in, it's likely because you can't resist, just like the folks that got in after 10,000 here from that move, still waiting for a decline that didn't come, and ended up buying this local top and spent 7-8 months into a capitulation in March 2020. Of course, COVID induced, it doesn't really matter. They probably capitulated at that point and took a loss out of a cycle that ended up going from 3,000 to near 70,000. So by understanding that volatility will come and getting in relatively early, taking advantage of any final capitulation by possibly doubling up or adding some more at least, understanding that volatility might come and looking at the prize again being the next high of the next 4-year cycle. I think people that can focus on that discipline and focus on just those few things, getting the right position at the right time, understanding there'll be volatility, understanding that this is not a week trade or monthly trade, it's a yearly trade, those folks will do well and will look back and be satisfied. So thank you very much, everybody. Wishing you all the best.